Hit it.
It's Friday, June 20th, 2025, episode 266. I'm Patrick Serezna.
And I'm Kevin Muir, coming to you from a sunny and friendly London. I'm on the road to another week with no guest, but rest assured we'll be back to regularly scheduled programming next week.
You know, Kev, it's like I literally came into Toronto for one weekend. I'm like, I'm gonna
Yeah.
get to see Kev. Maybe we could do the show live. And literally, you just like take off to the other side of the
Well,
Atlantic,
you know
and
what it
like
was?
we high fived midair.
Yeah,
Like,
Daniel told me you were going to be away this week. So like I was trying to plan it and I was like, I phoned up and said, Daniel, when is he going to be coming to Toronto so I can avoid it?
Great job.
thanks for
Yeah.
letting him in on, Danny. All right,
Yeah.
but listen, let's talk beers. Danny, you got a beer too, right?
I do. It's coming on the way. I can
Oh,
tell you
okay.
about it though.
Oh, you know what? You just drink it throughout the episode and then tell us about it in the post game. I'm
Perfect.
drinking the organic Mill Street Brewery lager, and it's a classic here in Toronto, and just that's what I grabbed here on the way. But it's gonna be good. Anyway, Kev, let's get to the stuff. So why don't you give us the disclaimer?
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects. I just said side effects, didn't I?
Yeah,
Um,
probably.
okay, we're just going to leave it in. Side effects of too much huddle may include not being able to pronounce the Tehran trigger tension,
Oh yeah.
fiscal cliff flashbacks, and the
Yeesh.
OPEX obsession escalation. So
There you
this
go.
is what the trouble is that when
No,
you
but you're
guys,
already drunk.
I know. So this is the
You're in
problem. Like
England.
where we flip things, and I'm doing this at night, and I did come from the pub to do this, so I am not as crisp as I usually would be.
I think so. This is fact. This is fact. All right, let's not waste any time and let's jump into this. All right, so Kev, listen, let's dive straight into talking actually not the charts, but rather what the hell's going on here in the markets because there's this. Let's break it down. Let's start with the big one.
Okay.
There's a clear new war starting in the Middle East. How severe it gets, how bad it gets, is a lot of the unknowns. But clearly, the possibility that the Strait of Hormuz is going to be disrupted is a real possibility. But right now, the stock outside of oil prices spiking, no one seems to, at least in the way that the prices are behaving, the markets put much risk to this, or at least they're not considering it that important. How do you size this up? Is this a nothing burger, or is it at the point where the market will start to care at some point here?
Well, first of all, I have not been checking on markets as much as I should be. But before we do any of this, I think a big kudos has to be, big shout out to somebody I know that has been long oil and pitching it on this show. I believe it wasn't
Yeah,
just your members actually sharing some of that golden alpha with the market huddle
because I
listeners
had
as well.
insider information. I have like I have that inside line to
But
Trump,
listen,
and like,
the thing about technical analysis is remember you don't the it's already in the price, Patrick.
yeah,
So all you were doing was reading the chart. Someone else knew about the insider information and
exactly.
you saw that in the charts and you did it. Anyways, I know I like to
Yeah.
kid you, but you do deserve a big kudos
Oh,
because
thank you.
you're one of the few that I actually saw that was actively pushing along and that's great. And I'd love to know. I'm going to turn the question back in on you. Are you still long? How are you playing it?
Uh, Well, right now, I still have some of my original positioning. There's been some active profit taking because once you let's have a quick look at the chart. So like when you look at the chart on crude, after this big jump, we reached a point now in this midpoint area here where I don't see much asymmetry in the trade. This is really now a geopolitical gamble because either A, the thing is going to be a full-on escalation, and then we're going to have a rip to like 80 to 85 bucks on the upside, or there's a de-escalation and this thing could be at 65. And so to me, this is now becoming, from this level, a bit of a lottery ticket in terms of what's the next geopolitical headline coming out. And obviously in the next 2 weeks we're going to find out whether, for instance, the United States joins the confrontation. Lots of things that is going to cause the oil prices to make some pretty serious swings, and we're going to find out what's next. To me, I think playing the energy stocks now is a little bit better than playing oil itself. There's a cleaner moves that are going to be able to be traded in the individual energy names. Right now, I took some profits on some of the oil contracts, and now it's just a matter of seeing whether the next leg happens or not.
Do you know who should get you on their show?
Do
You
you
should go on
think?
Macro Voices and talk about oil.
Funny. That's you're a comedian. I like it. No. Okay.
I'm gonna pitch it. I'm gonna pitch Eric on it. I'm gonna say, hey, there's this guy who's a really good oil trader. You should get him on the show.
Actually, if you do listen to the show at one point, you realize we do talk about oil on the show every week.
Well,
But
there you go.
but you know what? You know what? Like
I don't listen. So
exactly. So I was gonna say, go ahead and make the pitch. I'm pretty sure Eric will. All right, let's go.
he'll be very impressed with you doing. I'm sure he's congratulating you across the board as well. Okay,
Yeah,
let's go
so-
to the next
No,
whatever
well,
you wanted to.
Well,
What you
no,
have
let's
for
just
us.
talk about this. Like,
Okay.
do you think? Okay, right now, clearly the entire impact has been almost directly on oil, and it's clear that oil moved on this.
Yeah.
Okay, but do the stock markets start to give a shit at some point?
Okay, so my little bit of value had for this conversation today, and it's going to be limited, but I wrote about this earlier in the week. I said, and it was funny because I had started writing the piece before the war or the
Yeah.
escalation, whatever you want to call it. And then I was like, screw it. I'm not going to not write it. I'm going to continue writing. And I published it. And I said, as difficult as this sounds, I think that the rest of June is going to be really boring. And the reason it's going to be really boring is that this amount of gamma out there in the stock market, meaning the market makers, the amount of gamma that they're long is just huge. It's also below the market, meaning the strike is 59.05. So even as we decline, they're getting longer gamma, which means that on the dips they're getting longer, on the rips they're getting shorter. Like it's increasing. So my point is that you have that, and then also, Patrick, you have this situation with the vol control funds, and the vol control funds are a backward-looking strategy, and this gamma that is weighing on the market and keeping volatility low then makes it so realized is low, which means that the vol control funds are buying more, which just kind of has this whole way of keeping the market bid and boring.
All right. Well, you know what? First of all, I'm 100% agreement. That was actually the second topic we were going to talk about was the gamma pinning because I wanted to talk about this OPEX thing. But let's just put it this way. Next week on Friday. So today we have the June 20th OPEX. Right. And so now we're closing very close to 6,000, which is a logical thing because there's a very large amount of monthlies that expire at the nice round number of 6,000. Next week, we're going to have the big JP Morgan whale that you were specifically referencing with that huge 5,900 strike. But the 30th is on Monday on a European cash settle. So the fact is that by this, at the end of next week, the gamma pinning's over. Right.
Unless we're right at it over the weekend.
No, over the weekend. No, the point is that we have only one more week of spinning. And so the thing is that there's a chance that July is going to be moving. And
the thing, Patrick, is that the vol control funds will continue to be bidding. They are still like only a third of the way into their buying all their stock.
The VIX. Okay, so let's have a quick look though. This is the crazy part. The stock market is at very close to its 52-week high. I mean, 150 points off, but it's up along the highs. Volatility has become narrow. The market has traded sideways for a week and a half now. Yet the VIX is above 20. It's not back at 15 and 16 where it was trading just.
But that's the war premium.
Oh, okay.
That's the war premium, and it's also, Patrick.
That's fine. But when you're talking about these vol control funds,
they don't care about the VIX. Vol control funds is all realized vol. It is not on implied. So we could have a situation where the volatility risk premium, meaning the amount that the implied volatility trades over realized, is huge. And yet the vol control funds won't care about that. They only care about realized vol.
There you go. Okay, I learned something. I actually thought implieds actually mattered to them, but
no, it does not matter. So what implieds matter about is the Vanna bid and offer.
Right.
Sorry, the Vanna delta change. So when you get a decline in the implieds, based on the way that the market makers are usually set up, that causes more buying. So
Right.
that is the Vanna bid that you will often see. So a lot of times, like going into a weekend, you'll have two things happening. You'll have a charm bid because of the movement forward in time means that the market makers need to buy more. And then also you'll often get, as it rallies, you'll get a decline in the implieds, and then that will also cause a Vanna bid. So you will
Right.
have a Vanna and a charm bid on a lot of like slow, long weekends or weekends. But it doesn't necessarily need to be. The vol controls completely separate. It's completely backward looking on historical.
Right. So here's my call, Kev.
Okay.
While I'm in complete agreement with you, for the next 1 week, the gamma pinning is going to be the strongest force in the market, barring some surprise attack that throws the market a huge curveball that kind of pushes the market out of the gravitational pull of this gamma pin.
Yeah.
But beyond that circumstance, next week is going to be quiet. But my call is July is going to already wake up.
It's gonna be
I
spicy. You think
I
it's
think
gonna be
I
spicy by
I
July?
think I think July and maybe not the first week of July, but I think as we get into the July OPEX and all that big amount of earnings that are coming out in July, I honestly think that it's not going to be a quiet summer.
I'm not going to push back on you, Patrick, because I also think that we're going to get finally the tariffs are going to start to kick in. You're going to start to see those things in terms of the numbers. I think there's a numerous things coming due, and the complacency out there is huge. So I'm no pushback from me, buddy. I
All right.
just think that maybe you're right. It's not going to be the first week of July, because don't forget, we have July 4th. We have a bunch of things in there. So maybe it's like mid-July. I don't know. But I hear you. Like
It's,
everyone thinks the summers always are boring. I remember lots of summers where crazy stuff happens because everyone's gone,
yeah.
right? Like everyone's gone. There gets to be some information. The market is set up in a weird way. Next thing you know, it's like trading all over the map. So I'm
Well,
not going to.
we're gonna be almost 3 months of sustained rallying by the time we get to July, right? We're like 75 days into this current advance off of the market low. So add another week or two of market. We're 3 months into a market that's pushed 26, 27% on the upside in a fluid motion, long overdue for a correction. And it doesn't have to be the beginning of a next bear market, but volatility is going to be back. There's going to be some proper swings, something that's going to correct this market from this move. I'm calling that. But
Okay, well, listen, people, listen up. He called the oil. He's calling this.
Oh
Be
shit!
long
Now
at your peril.
no, that's the opposite. Now you're fucking goochering it on me.
I'm
Like
good. No. As long as you're not saying that,
are you okay? Are you going to be short? Because if we're both short and we're
Patrick.
talking this way, then
You
it's
know
not
me.
going to
I'm
work.
almost always short.
Okay,
I'm
so
not very tall. Like you
so
sat beside me. Like I'm not
so
tall.
so here's oh, you're such a wanker. Okay, so let's talk the last topic, and then we'll go and do a bunch of these options. Sorry, the charts.
Well,
So
actually, get serious. You mean?
yeah, we're gonna get serious here.
Okay.
But what I want to though talk about is the Fed. Okay, so
Oh,
the FOMC once again uh, gave the expectation they were doing nothing, and they did nothing. So we have now a scenario where the market is pricing in, I think, 2 rate cuts this year. At least that's the highest probability that let's say have a September and a December cut or something like this. And I think they're pricing right now like 4 cuts for combined for next year. So no, sorry, 2 this year, 2 next year. So 4 combined altogether in the cycle. Um, is this uh too optimistic in terms of hawkishness? Like I my spidey senses,
hawkishness or dovishness?
well, I think no, I think that the cuts are going to be deeper. I think that the
Oh,
market is not pricing enough of them. So
okay.
how would you word that?
Okay. So
How
one second before we go any further, I just want to let everyone know that I had a great macro tourist meetup, and I promised to shout out to them. And this is the perfect time to have the shout out. And I'm going to tell you
do it?
why it's the perfect time. Patrick, when we're sitting there and I'm talking, and everyone all of a sudden starts talking about the 61s, and they're like, "Are you long the 61s?" And I'm like, "What?" Like, and everyone's talking about the 61s, and there's some bond that is a UK, like a government bond that was issued in 2021 with like almost a zero
Zero
coupon.
coupon.
Yeah, like it was like 0.5 or 0.25 or maybe an eighth or something. I'm not really sure, but super low coupon, right? Like dumb, super low coupon. And now, obviously, with rates way up, it's gone to like, I don't know, 40 cents on the dollar or some stupid number like
Yeah.
that. But the thing is, Patrick, here, they actually don't pay tax on that capital gain. Okay.
Oh, wow.
So everyone I meet is long these bonds. It is the craziest thing I've ever seen. And so we had a great meetup. It was terrific. Thank you everyone for coming. I had an absolute blast. They were like just a terrific bunch of folks. We went out drinking, we had steaks. It was awesome. Just a terrific time. But then the next night I'm at a more sophisticated kind of institutional thing. And I'm like, okay, I'm gonna see if these guys in my group are like telling the truth. And I'm gonna be like, all right, like, can you guys tell me about this 2061s or whatever? And sure enough, everyone in London is long this thing. Everyone is long. Everyone is bond trader. Everyone owns these things. And they're all sitting there, Patrick. So they're all bond traders and they're all kind of a little bit of a part of them is hoping rates go back down and they make all this money.
Well, the thing is
So
that
they're
that's
your
that's a
peeps.
but
They're,
but
they're your
that's
peeps
a
too.
bet on the but listen, that's actually the wrong part of the curve. Sorry, the duration that I want to talk about, right? Like, so
No, but at least Patrick's is because you're not bullish enough, buddy. Because
yeah.
you used to love the long end because rates are
Well,
going back to zero.
I
So
actually don't hate the long bond, but that's not the conversation
listen,
I
can
want to
I
have
can
here.
I interest you in some 2061s?
Yes.
And then the
Give me an
funniest
offer.
part is
Give me an offer.
there's one nice guy there who's a sell side trader, in something else. He starts talking to us about how, you should really roll them down into the 2051s, blah, blah, blah. They're like sitting there. It's like, and you know what, Patrick? It's such a different environment because, like in New York or Toronto, we'd be talking stocks, and
Yeah.
instead everyone's talking bonds, and they're all your peeps, buddy. They're all long the bond because it's tax free. So I just wanted to put that out there. Thank you everyone for coming, and I hope your 2061s work because it seems like all of London owns them.
Well, somebody's got to own them, bud. Somebody's got to own them. I'd love to see who was the bag holder on the way down. But anyway, so let's though talk the Fed. Let's go back to this thing. So
Oh yeah. So wait, and
my view is this. Let me, and then you can call bullshit on it and
no,
tell
I'm
me that
probably
you're
not going to be as what you
but
think I'm going to be.
my view right now is that it's incredibly asymmetric. And why do I say it's incredibly asymmetric? Is because I feel that the chances that the market is going to pull those 4 rate cuts out of the market is an outlier. Like, I think that there's some, what would have to happen for them to go that much more hawkish that they're pulling those rate cuts that are already priced in out of the market. It could happen, but I don't view it as a high risk. But what I do view,
Really?
what,
Like you
yeah,
don't
I don't think
I think you're a little too casual about that risk, but I'm not going to disagree with you. I feel like the tails are extreme on either side. But anyways, go on.
yeah, but my second thing is that the Fed has historically always kept things too tight till something breaks. I remember that David Rosenberg chart that was showing that through all the previous rate hike cycles, the Fed stays tight until something breaks in the financial system and the plumbing, and they're forced to cut more aggressively. And now all I'm just saying, the fact that they continue to delay the rate cut cycle increases the likelihood that something in the plumbing seizes. It doesn't have to be a great financial crisis, but I think that something in this system is going to crack, and the Fed is going to have to be much more dovish than is currently priced in. I think there could be at least 100 more basis points put in on the rate cut cycle. And this is why I'm looking here on the chart on the SOFR December 2026s. I think I don't see it as an unrealistic target for this thing to go 97.5 to 98 on an upside move, and I don't see that much downside risk. I'm long this shit.
Okay.
Now tell me why I'm wrong.
Well, no, I'm not going to tell you. Well, I'll tell you why you're wrong. You quoted a David Rosenberg chart to me, and you should know better than that. Okay, like that should be what. I think you're underestimating the chance of inflation spiking and the Fed, even though they don't, nobody will want them to, and it'll be a whole shit show of them potentially, at the very least, taking out all those cuts and potentially raising. I'm not saying that that's a high likelihood. I'm just saying that you have said there's no way that's happening, and I'm going to say there's a greater chance than you think.
I just said outlier. I didn't
Yeah,
say
I
no
feel
way.
like
I said
it's
outlier.
okay, but it
Well,
almost
what are you going to give it, a quarter chance? Like 25%? What do you want to sign?
no, I'd say less than that. I would say less than that. So I'm not disagreeing with you, but I could also see them just leaving it here for a long time. But I will. This is where I will get into your camp. And I recently, from my weekly wrap up, I clipped this Gunlock video, and he started talking about how the market is increasingly starting to price the potential for a new Fed chair coming in and just slashing rates by 200 basis points. And so we might get a situation. I haven't done the work yet. It's my job when I come back to like figure this all out. But I suspect there's going to be some spreads in there that the smart guys are already trading. And if Gunluck's talked about it, that means that even the non-smart guys have figured it out. And then there was me. That's like even I have to wait for Gunlock to tell me. But anyways, my point is that I really do worry about a new Fed chair that just like lowers rates 200 basis points. And so when you said this thing where there's a chance that the Fed, panics, I agree with you. There's a chance that the Fed panics because the economy goes down. I also think there's a chance the Fed not panics, but gets super aggressive even without the economy going down in the period when Bernanke is replaced. Sorry.
Yeah.
This is what happens when you let me drink, even in the period when Powell is replaced. So the market might start looking at this, like, because they're talking about putting in this shadow Fed chair. So let's imagine they put in a shadow Fed chair, and he says things like, "Okay, rates are whatever they are now, 4.25, right? Like whatever. If it comes down to me, I'm going to lower them to 2." Right? So all of a sudden, Powell will be saying these things. So Powell will be like, no, we're leaving rates here. The balance, it's balanced. It's equal risk of up and down. And then meanwhile, the market might go and price in that like a year and a half from now or a year from now, whatever the period is, and I got to go figure it out. I think it's May next year. When is it? Like, when is it that
I don't know the date.
I think it's May next year. So all of a sudden, come June, there's like a 200 basis point cut in there. And I know that seems extreme, but like this is Trump. Don't discount anything.
Yeah.
And like there's already, talk about who he's going to put in there and things like that. Lots of different names going around. A lot of people think it's Moran, other people think it's Warsh. There's some talk that it's going to be Zervos. But you know who my pick is?
You tell me.
The head of macro for Einhorn. This guy has been like, saying how great Trump is all the time. I figure he's like a shoo-in.
There you go. I haven't followed that, but
you got to follow it anyway. So to your point, I think that there's this. We're gonna have to figure out which contract it is that's post the new Fed chair, and I think that thing could get bid even higher. Like I think that this will be the thing to watch.
I love it.
Yeah.
I love it. I think the market is underpricing that. All right, so I here have a chart on the long bond. So let's talk about this is not the 61s, but nonetheless is the U.S. bond. But the thing is, we came and retested technically this previous low, right? And while we still had a lower low back on the bond here in 2023, that doesn't correspond with the level on the yields itself. So let me actually just put it up on the actual 30-year yield, and what we can observe is where we retested the previous not all time, but multi-decade highs of interest rates up along that 5% yield up there. And here we are in a situation where you may have your perfect scenario where we may see the long bond actually break down as the yields break this level. And I don't think that there's enough people actually talking about this outside of your little clique of bond haters. You got your like a bond hater club. But beyond you guys, I don't hear anyone talking about this. But I think that if we had a breakout above this kind of 5, 5, 10 level on the long bond, at some point it's going to become, people are going to be like, what the fuck's going on? All right, and it could actually create a feedback loop of negativity that is now very complacent. It's almost like oil was complacent before that move, right? Like it's a scenario where nobody's talking about this, but this long bond could rip, or sell off, sorry,
Yeah.
and the yields could rip.
Welcome to the dark side of the force.
I am only observing technicals, Kevin.
Well,
It's not. I
okay,
am
well
not.
then
I'm
that's
not.
fine.
I am. I don't. I reject the membership card for your bond hater club. Like I'm only. I'm only looking at the squiggles, my friend. It's
Well, that's fine. Welcome to the club, even for the squiggle members. You can have a special membership.
all right.
Only when squiggles look bad.
Yeah.
Okay, I like it. Yeah,
All
listen,
right.
you know me. I've been in the bond. I think that
Yeah.
if they'd gone ahead and tried to like make a deficit of 3% of GDP, and they were having the deficit, then I might be in the bond like bull camp, or at the very least, I would
Yeah.
put aside my membership and put it on hold, like make myself an out of town member. But in the meantime, it's like they're actually going the opposite way. Like this is going from 6 to maybe 7 or 8. Who knows? Like they keep spending, the rest of the world's spending. There's a lot of chance for a real big
The big
problem
beauty.
in the bond market.
The To me, I try to be impartial towards U.S. politics. I'm not American, so I don't get involved that way. But I really thought when they were coming in with Doge that they were really trying to bring down that fiscal spending and rein everything in, and that big beautiful bill just demonstrates the complete opposite. And so once that kind of came out, then it's like I immediately was like, no, you can't use that playbook that they're gonna bring it down. And so to me, this is still very much maybe this is what's gonna happen. That has to break the big beautiful bill. It has to be the interest rate markets and bond vigilantes basically saying you guys got to slow down. So if
But why do they? It's beautiful. Why? Like we don't want that.
it's a
We want to
beautiful bill,
pass. It's beautiful.
it's
It's big and it's
big, it's
beautiful.
beautiful.
Yeah.
All right, let's talk the currency. So the U.S. dollar index did temporarily make a lower low, and I want to briefly kind of dissect where this is coming from, because it really is driven right now by the euro currencies. The euro and the pound have been making higher highs. So the euro broke a slightly higher high, little flagging formation for bull continuation. That pound sterling broke to a higher high. Recent few days had a little bit of a pullback, but they're very much trending. But this is not the correspondent with all the currencies in the basket. Like for instance, that U.S. dollar yen has been actually not only quite range bound, but it's been quietly creeping a little bit higher. Now, I'm not trying to make a bull call here on the U.S. yen, but rather to observe that this isn't a U.S. dollar route anymore, where suddenly the U.S. dollar down and all other cross currencies up. You've got actually a bit of a mixed bag, and I continue to be in the camp that I think it's far more likely that the dollar is going to be far more range bound. But this is such an important moment because. If my range bound thesis is there, like it can't break to lower lows and just keep going, right? Like this is like a make it or break it moment on whether or not the US dollar is heading to the 95 handle or lower. I still think this bounce might stick, but I'm not bullish the US dollar because of it. I think we might get up to like 101, 102, retest that May high, and then and be far more sideways range bound. I'm not super excited about a short term currency move. The next time I think there'll be a big currency move, it's going to be when the whole intermarkets start buzzing again, like when the stock market starts moving, where everything goes, maybe mid to late July or something. But on the short term, I'm kind of neutral here. Do you have any convictions on your currency plays here?
Do I have any convictions? No, like especially over the short run. I think I agree with you. And in fact, you could maybe make the argument that there's too many people short and that it's due for a squeeze. Um, Having said that, longer term, I'm actually more convinced it has to go a lot lower. But um,
That's
I'm
always the
still
thing, right? It's
I'm
trading versus long-term positioning, right? Like,
right. I'm still putting together my currency kind of thoughts because I must say here in London they really talk a lot of currency. So I've had a lot of things coming at me, but I will agree that there is a lot of folks that from a trading and short-term perspective seem to be short the currency. And I do worry that we'll get a exactly what you're talking about. You know, a rally that gets people kind of bulled up, and then you spend your summer chopping around. It does goes nowhere, and then it's actually in the fall that it goes down. I won't dismiss that at all, Patrick.
yeah, and that's the camp I'm in on that front. Next thing I want to talk about is the precious metal, and so gold went for that double top retest of its previous high, few days of giving some back, but by no means a violation of the primary uptrend. It's above all its moving averages. It's still making higher highs and higher lows. So this is just the gold market hitting resistance and pausing. So I'm not in any way trying to pivot, but it is testing a major high. I mean, if there was ever such a thing as it forming a double top, it has to be off of a retest of its previous high. And so there's always a possibility that this begins a little bit of selling, but I'm just not in that camp. Things just look like the momentum is just building in precious metals, particularly in the secondary markets like the silver, platinum, and palladium, just picking up steam. I still think that gold makes the breakout here, and I don't see any reason why we can't see a 36 or 3700 gold this summer, like just a continuation of this on the upside, where I will immediately take back that and admit that something different is happening is if the 3300 level gives out. So right now, as long as this dip is held above 3300, I'm looking for those upper targets. You still bullish gold?
Still bullish. I think if you didn't know what this chart was and someone put this in front of you, you'd have to say you should buy it. Like
Yeah.
in my limited squiggle analysis capabilities, that's how I view that.
All right. I like it. Your limited skills are confirming. No,
Okay.
but but let's look at the other precious metals. So, silver had this kind of like $1 down day here, but that was after an extended move higher. And so after we've seen that move, we're now due for some sort of retracement. Look at this, like a 50% retracement lines up perfectly with the 50-day moving average, which is basically a pullback that could go to like the $34 to $35 area. At this moment, old dips should be bought. This was a legitimate bull breakout. Silver went a little hot, and pullbacks happen all the time. Buying the pullback is the only logical thing at this stage. It could still drop another dollar, but it should be bought on dip is my current positioning on that. Any comment, or you want to keep going?
No comment. Just keep her going.
All right. So the next thing, let's look at that platinum and palladium now. Platinum, what an epic run! I'm going to put this just on a weekly chart so we can really put into context just the magnitude of this rise. Like for 3 years, platinum is basically traded in like a 200 point trade range. From let's say 900 to 1100 was this like 3 year trade range. Here we ripped basically 400 points in literally less than 2 months from trough to peak. And we haven't seen this kind of action in platinum since the 2020 move, and so it's really woken up. Obviously, these things can retrace at some point. There'll be little dips like silver coming down. You can see today it's down a little bit, but with this kind of momentum, this feels almost bubblish. Like a dip here could be bought, and this thing could rip to 1500 or 1700. Like it really has picked up some traction, and I don't want to fade this too early. I think this is a momentum play. Any I think that.
And I got nothing to add except that the best markets never let you in, and I'm really wondering if that's what it'll be with platinum.
There you go. Now, the one that's lagging that is really interesting to me is Palladium, though. Like, look at it broke its basic 1 year trade range. So it was stuck in this trade range essentially since November of last year. So let's call it like a 9 month trade range or something. So we broke to a higher high above the moving averages. This dip is holding the fib retracement zones. This looks like a bull continuation pattern. I think that we could have a run to 12, 1300. It's been the laggard in the precious metals, but it's a bullish chart that looks like it's ready to go.
Okay, it could be. I kind of look at that and go, "Oh, I don't need to play. I'd rather own the one that's leading."
All right. Well, I mean,
But
that's
yeah,
just that's a trading position. Do you play momentum or do you play the laggard catching up? That's always like the big trading debate
yeah,
when amongst
right.
everything, right? Like which angle do you take there? But anyway, I think that this is lots of room to get going. The other thing I wanted we already talked oil, so I want to talk about uranium. Now, let's first start by talking about uranium stocks. I'm just going to use the URA because, like, what a drop and pop! Like, we went through this like 6 7 month or even longer bear market where we saw these things lose 30 40% of their value, and then just this extraordinary rip 100% move in less than 3 months. It's insane how much uranium stocks is. And the story got hot, but what was interesting, what I wanted to first of all, it's hard to buy it once it's already doubled. I still feel like you need to, at this point, switch to, you either have to put on trades using some sort of option strategy that builds the asymmetry in this, in let's say a bull call spread or some other form where you can actually have a definable risk, because where the frig would you put your stop losses when you're buying this thing? Like it's kind of tough to size the risk when there's this big of a move. But nonetheless, I need personally need a pullback to buy more at any stage here. But what I wanted to just highlight though was the U308 uranium was dragging its heels, right? And the uranium equities went on this huge bull run, and spot prices uranium didn't move until last week when we or earlier this week when we got this $5 jump in the U308 to $75, and suddenly spot prices of uranium have woken up. Now, everyone keeps making fun of this as the hedge fund hotel, but I think after a 15-month decline, I think the hedge funds have actually all vacated that hotel pretty thoroughly. So the question is this the beginning of a bull run in spot uranium?
Um, so I guess I'm going to disagree with you that the hedge funds have checked out of the hotel. So
You
that's
think?
they haven't checked out. They're still in that hotel. Having said that, it's a small market, and the spot was actually trading lower than it should be. Like I
Yeah,
remember, didn't we talk about the uranium whisperer? Did I
yeah,
talk
yeah,
about this here? Yeah.
yeah.
And he was talking about how term was trading much higher and that the spot was actually the problem. So what I think is happening here is that spot had a little bit of overhang and there was still too many people in that hotel. And it's not just like the U.UN, by the way, or the spot. There's YCA, and then there's even the hedge fund guys that somehow they own uranium in the spot
Mm.
market, which makes no sense to me. I don't understand how they do it, but I do know that there's people that are capable of warehousing uranium, and they're doing that as a way to play it. So what I think happened here, Patrick, was that some guys got together and go, "Oh, you know what? Spot's trading too low. Have a look at the stocks. The stocks, there's all this bull market in the stocks. There's a bull market in the term. So let's buy some of the spot." It actually went up. They pushed the SBUT or the U.UN to even, meaning that it was used to be at a discount. They pushed it to even. At that point, they then went and did a $200 million bought deal. That bought deal was actually supposed to be 100 million at the first, when it was upsized to 200, and that 200 million had to get resulted in 200 million spot being bought, and it's
Yeah.
in essence cleaned up the market. And friend of the show, one of our guys is that we talked to on the reg. He was, foaming at the mouth, saying when they did this new issue, he said that it's going to clean up spot and head higher. Um, I don't know. I haven't been following that closely. I'm still a little worried though. It still feels like a hedge fund hotel to me. I guess that's the only part that I'll push back on is that I could see this U.UN going right back to a 10-20% discount. Like
This
I get you sorry, go
this
ahead.
the discount is for sure. Like
Yeah.
that's just a closed end fund thing, right?
No, but it's even now. So you're paying even.
Fair, fair. Like so, I so, but the point here is that that even if let's say that we see a drag in the U.UN versus that of spot, won't change the fact that spot prices may in fact be starting a new trend, and so we might just see a drag on performance on the one versus the other. But the question in the bigger picture is that did uranium start now finally a new bull trend after spending 15, 16 months in a very distinct bear market decline? And is it the start? Because look, if something can be in a bear market for 15 months, it could be in a bull market for 2 years, right?
Okay.
If this is
So you're
if
you're
there's
you're just kind of stepping back and going, this thing's been going down for a couple of years. Is it finally over?
yeah.
So I will agree with you there. I don't know though if it's I don't know if this is the spot to buy it. I suspect you'll get a better chance to buy it this summer. That's my gut, but maybe I'm wrong.
You know what? Buy on dips is always something I welcome. Like but I feel though that if we can, if it's about the confidence level of whether or not that April low was the low, right? Like if we're buying dips versus rips is just being tactical about entries, which is really, uh, you know, uh, just you being a trader. The one thing that I want to just wrap up here. I want to just go through some of these global indices, and particularly what I wanted to highlight. Okay, so Nikkei broke to a higher high, seems to be trending. All right, approaching some very key overhead resistance levels where it put in its highs in late 2024-25, maybe a formidable overhead resistance. But we had going back, the S&P 500 was just very heavy, toppy, almost rolling over a little bit. But what was interesting is the Euro stock, on the other hand, for the last 2 weeks has actually been selling. We got a close below its 50-day moving average, actually a week of trading now below its 50-day moving average. And so it's certainly fading much quicker than both the Nikkei and the S&P 500. And I wasn't necessarily even expecting this, and I'm just observing. I don't even know if I have a strong conviction on actually what it means, but there's definitely been some more active distribution in Europe, and I'm curious whether this is going to continue. Any thoughts or anything that
I
you want to?
You know what? I don't have any view except that it is summer and the Europeans go home and like it's just could be like slow. Um and there probably is a little bit of disappointment that the fiscal stimulus isn't coming as fast as everyone hoped. And
Yeah.
so it's a little bit of selling it. I think like again, once again, I will say that I think I'm a long-term bull on the rest of the world, including Europe. But I think that you could see a summer of down markets. And so I'm here you. And what I like about you, Patrick, is that you're not letting fundamentals get in the way. You're saying, look, chart, like what's your technical term? Looks like shit.
Yeah.
It does. It really does. It's like it's hard to get excited about that chart.
Well, I mean, well, look, it was exciting for the rip higher. I mean,
Yeah.
there was some great money made, but why is it relative underperformers? The
Right.
kind of
That's what
puzzle
I'm
I'm
saying.
trying to
Like
solve
yeah. Yeah. I
on
don't think
that.
yeah, I don't know. Except that it's getting sold and that's maybe all that you should do is observe that and say
Yeah.
someone knows more.
All right, so I want to talk about three more charts and then we're done. All
Okay.
right, so here it is. Number one, the Sensex. So when we're talking India, it's been trading sideways for a month after a nice rip. This looks like a bull continuation pattern. If this thing breaks to a higher high from its May high, that may open up that move to run back to the September October high that put in up near 86, 87,000. So I'm looking to see whether or not India has a continuation on the upside. The other one I wanted to just highlight was the in Brazil, the Ibovisa. This flagging formation is attempting a bull breakout. It's not yet broken to a higher high, but this is how they start. If this also breaks out, we might have a bull continuation pattern in there as well. So, and the last one is just broadly looking at the emerging markets. So rather than cherry picking, this is just the EEM, and it's been pulling back for the last little bit, but it's been one of the hottest markets. And the thing that I'm watching here is that this pullback that we've gotten here has been in the past the type of pullback that almost immediately got bought on dip. So it'll be very interesting to see whether the buy on dip traders show up after these 4 or 5 down days that we've seen here. Are we going to see the typical buy on dip response, or is this going to be one of those things where they don't show up and this turns into a deeper pullback? I always give the bulls the benefit of the doubt. So this is a very interesting buy on dip level that we'll be seeing whether or not it gets bought on here. Any comment on these emerging markets I talked about?
I love this last chart, and I will very definitely be in the camp that says that dip will get bought and that will stay above the 50-day moving average, and that is something you should continue.
How much do you buy China or this EEM? Would that include China?
I have no problem with China from a financial point of view.
Okay.
So am I excited about them, about what they're doing? But there's lots of countries on, so I'm not excited about what they're doing.
How about from the natural intermarket relationship perspective? Do you have any concerns that if we have a very short-term dollar rip that this could drag on these, or do you think that these can just keep going even if there is some short-term dollar strength?
I think the short-term dollar strength will hurt them, but I don't think that it'll hurt them enough that you should not buy them.
Okay.
I think any dollar strength will be limited in its scope and very quickly sold. So I would use that as just a chance to buy more. That's kind of my gut.
That's all I've got, Kev. I think this is a good place for you to get back into the pubs and go for another round.
Okay, by the way, what is with this, Patrick? Like, I'm drinking a Diet Coke.
And the thing, the caps don't come off. That's a European thing. They spent a lot of money creating the caps don't fall off.
It's
everywhere.
Pretty annoying. So what is the point of it? So it's not killing some seagull?
Yes, exactly. So it's like it's so that there isn't the polluted thing of these caps everywhere.
I'm glad I didn't kill a seagull, but it sure is a pain to drink. Okay, thank you everyone for tuning in. We appreciate it. Patrick, where can they find you?
You can find me at bigpicturetrading.com. And Kev, where can they find you?
Then go to macrotourist.com. And listen, bear market, bull market, we're just happy for everyone to spend some time together on this crazy ride. Stick around for the after show.
All right. Well, Danny's got to get on here. And so, Danny, what beer did you end up drinking?
Oops.
Well, what was it?
Do you know what? I went for something that is probably going to shock all of you. I went for a lager shandy. Do you know what that is?
No, I don't.
Yeah, sure. That looks like you put fruit in there.
No, fruit. No. You have. So instead of a pint, you do a half a pint of beer, and then you top it with lemonade. So it's like a spritz. It's like beer spritz.
Yeah. Okay, that's soft.
There's
why would you destroy that? Why would you destroy that delicious taste of the beer by putting lemonade?
Lemon's a fruit.
This is an awful idea. You dilute it so that you don't get drunk, and then you ruin the taste of the beer. You're voted out of the show.
Yeah,
Go.
You're out.
Shoot.
You're out. Anybody?
Danny, come on. So Danny, let's hear this. Rate 1 out of 10 on your shandy, whatever you call this thing.
Yeah.
How would you rate the deliciousness of this concoction that you made?
Yeah.
Well, for me, actually, I think it was incredibly refreshing. So I give it a 7 out of 10, to be honest.
Oh my god! And see, you get amateur score. Don't even give it a.
When the wives have their morning breakfast with this stuff, we'll send Danny to make shandies for them.
Mimosas, that's what they're called. That's
mimosas. Yeah. Okay, Patrick, what is yours?
No, it's the Mill Street Organic Lager. It's super clean drinking lager. In the scope of lagers, I like this. It's like a 7.5. It's a solid.
So
no, Patrick, but you know what? It's nice, clean, light. It's a perfect summer beer.
So we were talking, Daniel and I were talking before, and he was mentioning how it's so hot in London and people are losing their minds. But little does he know that tomorrow in Toronto, it's getting stupid hot.
Yes.
Like it's stupid hot. Like,
And you know what? I came from Italy where it was 34 degrees.
oh, so it's
Humidity
it's
was
the same.
ridiculous. It's and so like yeah, I just like it follows me around. Like I can't
Yeah,
get a break.
that's your problem that you brought it with you.
Let me see what the.
Yeah, it's pretty bad, man. Like it's not like in Portugal it's dry, whereas here it's very humid. So it's
Actually,
not.
Sunday's 33. Tomorrow's only 27. So I'll still be all right tomorrow. I'll be on a plane before this shit hits.
Back to 40 degrees in Portugal. Perfect.
Yeah, something like that.
Yeah.
It's a
Awesome.
dry heat. It's okay.
Yeah.
So how have things been? Like, how's the in the old hood, Patrick?
Oh, it's nice. You know what?
Yeah.
The kids, the original Rum Shack, it's awesome. It's awesome.
The original
it.
Rum Shack, everything's
Yeah.
good. You're there, like.
Yeah, you know what?
Someone still has that house.
One of my no, it was the Rum Shack was moved to one of the other guys.
Oh,
places.
so you guys moved it.
Exactly, the legacy continues, my friend.
Oh, I get it.
But one of my I flew in one of my good buddies is turning 50 years old. One of my best friends, and so I had to come in for the celebration. I'm gonna get plastered tomorrow for sure.
Oh. Speaking of getting plastered, everyone that I met in London, not everyone, but a lot of them loved your 12 pubs of Christmas. They want to join you.
Oh,
and,
really?
And it is something they do in England.
Of course,
So-
that's where it originated from.
Yeah,
Actually,
exactly.
we got
I
it.
confirm that. I'm just saying that I confirmed it wasn't made up in your own mind. This is
Yeah.
actually something that exists. I thought it might have been something you guys just.
But you know what?
tried.
I'd love to. You know, Danny went through a bunch of those rules. That there's like these different rules you can make at each pub, and I think that the next level is for us to introduce some rules, because we just the only rule was you had to finish one pint in the 30 minutes that you're there. Like that was the only rule we had, to just go the distance. But
Do you
I
not?
think
Do
it'd
you
be
not?
more fun.
Do you not realize that there's an entire film made about this?
No.
English.
No. What?
It's
What?
called World's End.
What?
Exactly.
Yeah.
Jinx. World's End.
World's End. It's an actual film that was made about this. It's a comedy.
Okay. All right. Well, I now
Oh
know
my
what
God.
I need to watch.
It's Simon Pegg made it. I think it's Simon.
Oh my gosh. This is awesome.
There's
Exactly.
some nighttime viewing for you.
This
I'm
is
gonna download
awesome.
and watch it on the plane.
Yeah, you should. You should. World's End is basically the last pub that they need to get to.
That's
Well,
awesome.
there you
So,
go.
on the 12
Patrick, this is like me.
I love it. I love it.
There you go.
No, but now
You're
you know what the hardcore thing is, to grab the boys and come to London for Christmas and do it in London.
You should. I'm telling you, they would love it. You would have a crew like you've never seen before.
I think this is a great idea, because if there's any one place they would appreciate what we do, it's London.
That's true. That's
Like,
true.
It's like
That's true. You should do it, Patrick. I think you're on the hook.
Like,
You just said it out
no, I'll
loud.
tell you. I'll tell you. Like, for instance, if I did a 12 pubs in Lisbon, it just wouldn't be appreciated.
No.
Like it's
You get like
Wouldn't be-
you get like 3 English guys with you. Meanwhile, if you do it in London, there'd be like 250 of you, like market husbands,
absolutely.
like taking over pubs.
It
Like,
would-
you'd have to actually. I bet you that if you did this properly, you'd have to limit it, because you guys would take over pubs and it wouldn't be doable.
Oh, that is always the problem. Like I had my good buddy Bull that was the one that was doing it in Chelsea out there in London, and their crew was something like 60-70 people, and they would just go to the one bar for a pint, and like literally they would walk in and they couldn't even fit in, like the waitresses are like just going insane. Like you have to pretty much almost pre-order the beers, so that there's
That's
just a
true.
table, the
That's
table
how you're
outside
talking.
with all of the pints already listed and prepaid for, and they're just
You know what
waiting.
you should get? You should get your assistant there, Patrick, to go ahead and pre-order them.
That's
So
genius.
just running ahead and like ordering 60 beers, so that you guys get there and they're just waiting and everyone just grabs one.
Genius.
It is. Listen,
I'm in.
yeah.
I
Well,
think
of course you're in. You're English.
Yeah.
Like it.
All right.
I-
Well, listen, Kevin, we'll let you go, but you gotta
Yeah.
have fun out there. Say hi to all those huddlers out there.
Yeah, no, it's been an absolute great time, and I've actually really appreciated it. And everyone's been so kind, and it's a terrific place. And I'll definitely be coming back.
All right.
We'll see you guys later.
Yeah. Cheers. We'll be back in a couple weeks. Thanks, everyone.
Take care.